So there you go. So 173.70-ish
Yep.
is going to be a gold level of support. So if it stays to the upside, calls. If it drops down below, puts. Just remember, if you buy calls, let me tell the people in the back, if you're buying calls on Tesla when it is crashing, you better watch your ass. Right? I don't care if it's support. The overall is to the downside. You got to be really careful when you do this. Am I right?
Yeah,
Okay.
you have to be a expert scalper, in my opinion.
Yeah, you're going against the grain if you're buying calls when it is to the downside. And I don't like doing that unless you are a master trader, right? So if you can get in and you see a quick bounce and it pops to the upside and you're able to put your stop in there, and then if it knife drops and you're comfortable and you still made money, kudos to you. But for everybody else that is like, I think it's the bottom and I'm going to ride it all the way up, you're about to get your ass handed to you because you shouldn't be in this trade. Right?
So whatever it moves sideways like this after a move, it's either it's thinking. It's, are we gonna do the bounce, or we keep going? We're in that limbo spot.
Yeah, this is a level of consolidation, right?
Yeah, that's the word I was looking for.
Yep. So here's the thing. The longer this consolidates, the bigger pop or drop you're going to get. It's kind of like a snake coiling up to strike. And this makes it more dangerous for all of you. But I can tell you what, if you guys are really good and you've listened to anything I've ever told you, isn't this a beautiful setup here for a straddle?
Yeah, that's true.
Right, everybody? You buy calls and puts, and then give it some room to decide what it wants to do, and you're a winner chicken dinner, right?
You could even set your stops on your straddle and it'll do itself. Okay.
Bingo. Just remember though, give it a little bit of room, because what you don't want is it pops through just a little bit, because remember, if it doesn't break and hold, it can just poke its head through here. It'll kill your call, bounce back up, right? And then kill your put, and you're like, oh, double loss. Check this out. I'm putting it on the line so you can see it here, right? So my straddle is here. So when it touches right here, this is my straddle. You can do it here and you can do it here. You can do it either way. So I'll put it here. Why? Because these are both the critical levels, right? So you can do it either one. Here, here, or on this one, here, or here. Does this make sense?
Yep.
Then what you're going to do, though, is you got to give it some room. So I want my stops to be down here, because I need room. I want it to break through. Just like up here, my stop is way up here. Give it some room. It's got to break through and hold before I want to get rid of the other one. Because otherwise, it could break through, run up, break through, run up, break through, and now you're losing, right? All we're truly doing when we set up a straddle inside of this hot trade, look at that. There it goes. Bye. This is why I told you. Yep. Now right here. See this? Now our calls would be getting ready to shut down. I'd give it just a little bit more, obviously. But you see how you got to determine the direction? That's the beauty. That's the beauty of it. But you want to give this room. Why? Because it could just fake you out, cut it off, run to the other side, and then you're like, damn it. You got to have room. If you guys can't have bigger stops, you're in the trade too big. Your position size is too large. You're trading the wrong stocks because you can't control the way it moves. You got to be able to let it have some room, right? If you can't afford for the stops to be bigger, you already know you're in a wrong trade, right?